Good morning, Paul Georgie from Allendale. It's March 4th, Tuesday morning, and the first line of business here is that the Allendale is having its annual planted acreage survey that's being conducted last week and this week. We'll give you the results on March 13th. So anybody that hasn't filled out the survey, we ask that you go to our website or just give us a call, and we'll get your numbers in that survey. It's been a very critical and important survey for traders to get the results here ahead of the USDA report that's coming out on the 31st of March. In the marketplace, we're seeing some back and fill type action in the grain markets today. Corn, wheat a little lower, soybeans a little higher. And a lot of that is coming off of the news and the commentary from Putin that says, hey, we're bringing our troops back in. The military action that was run here over the weekend is done now. They've done a great job. We're bringing them back to base. So that is cooling off that tension a bit in between Ukraine and Putin. And I think that is giving a little bit of risk-off type attitude across the commodity sector here this morning. Other news that continues to be important is the demand side of the equation. Is China going to cancel some soybeans? They're going to switch those beans to the Brazil and Argentina area. Right now, we're hearing that China actually has got more soybeans than they can get unloaded in their ports. They're trying to push back some of the deliveries out of Brazil right now from the March-April time frame to the May-June time sector. So because of their demand in China for soybeans and soybean meal has been reduced dramatically because of the bird flu situation in their poultry population. Also, the hog industry is dialing back some of their expansion because of hog prices and production being much greater than what they can consume right now. So those are the reasons that China is slowing down some of the demand. However, we haven't seen any cancellations, and that's the important factor that trade's looking for. Until we see those announcements, expect some good underlying support in the soybean complex. The wheat market affected a bit by the news yesterday afternoon. We've got the crop conditions reports out of the major wheat producing states, the ones that give it to us on a monthly basis, and showed that wheat conditions in the hard red winter wheat area has deteriorated further and down anywhere from 1 to 3% in the major states. We should be getting the USDA's first overall number on the 12th, so we'll be watching that closely as well. The other news, we did have good movement in grain yesterday afternoon, both corn and soybeans. Basis under pressure at a lot of the elevators and processors late yesterday after the large movement and the sharp rally in futures prices. Right now, technically today, I think some key numbers to watch in the May corn, for instance, the 465 level. Dece corn 470 is a key number. The adage is old resistance now becomes support. So those are areas that we're going to monitor closely today. If we close below those areas, it could lead to some further pressure to the downside in the corn market. We do have the USDA supply-demand report next Monday at 11 o'clock in the morning. So we'll see some adjustments here ahead of that, as a lot of the trade still believes those numbers could be a bit on the negative side. However, I think the overshadowing factor will be the situation between Russia and Ukraine, even as we go into these USDA numbers. In the livestock markets, the thing to note there is the April live hog futures contract is now $12.50 over the cash index. Now, we are seeing some strength in the cash market. Yesterday, we've seen $2 rally in cash hogs. Packers still looking for some inventory, and they want to get enough supply around them. The big concern is that they're waiting for this PED cliff to hit the market, where we're going to see a lot less numbers and supply of market-ready hogs because of the problem with PED. So we're waiting to see that come into action, and as you know, we're futures markets, so we're trading ideas ahead of the curve. And in the cattle trade, expecting cash cattle to be steady this week, as we're seeing some strength in the product. Again, cutout values in choice beef was up $3.79 yesterday, select up $4.69. Still not enough to turn the packer margins from red to black, but certainly helping out and giving them a reason to hold the cash markets in the steady range this week rather than lower because of their large losses in processing value. So a lot of things going on, certainly a lot of reasons to stay in touch with Allendale's research. I want to remind everybody that Ryan Martin's weather information here, Allendale's new in-house meteorologist, is putting out weather information that's available on our website. Check that out, and he's doing an outstanding job, so definitely worthwhile taking a peek at the www.allendale-inc.com. So we wish everybody a very successful trading day, and we'll talk to you tomorrow morning.